Today's November 5th. We're going to do our Friday investment talk. We're actually pretty much on time today. It's 9 p.m. in Moscow and 11 a.m. in California. We have with us our guest, Daniel Sayap, and he's done these before with us. He's going to talk about a couple of markets he thinks are interesting. But before that, we're going to talk about the big thing in Glasgow this week. And it didn't make headlines in the United States, actually, Alan. No one really cared. But I guess no one really cared in Glasgow either, from what I heard. So
basically, I'm going to want to don't want to turn this into a sermon, but I just thought we couldn't really ignore it, even though there's huge ramifications for all of us. But we've talked in this forum about greenwashing and various other sustainability and things like that, and I think it is going to be an important investment theme going forward. There's no doubt about that. Exactly how we play it and how it will work out, that's still to be discerned. I just wanted to bring up a few things. First of all, this was Rainbow Warrior. This is the Greenpeace ship are actually arriving in the River Clyde, which is the river that flows through Glasgow, and this was it on its way up into Glasgow. And I just thought it was a wonderful picture, actually, of a dolphin kind of escorting it towards Glasgow. I think there's a lovely poignancy in that. Maybe even you could say with a certain purpose, but that's enough of the jokes. I think the time for greenwashing is coming to an end, and we're going to find the ramifications of what's happening in Glasgow, and it comes to a crescendo next Friday or next weekend in a way. So we'll probably have maybe another comment on it next week. I wanted to bring up 2 or 3 graphs, which I just think, again, for those who don't really understand the magnitude of what's going on, some pretty scary stuff with regards to emissions and climate change and how the world's adapting or not adapting. Maybe there's a lot of things being said about sustainable agriculture and how we're going to have to change how we eat. And here you have, things like beef, for example, is a standout where everyone is saying that people have got to stop eating beef, or at least reduce their consumption, especially when you see places like China, which don't really have a big beef consumption. If they start to consume the way that America consumes, for example, then that line at the top is just going to go much, much further to the right. And so it's probably unsustainable. Where the opportunities are beef grown in labs. And I think we're going to find that coming through in the next few years. That's an opportunity definitely for investors. We're also going to see, and I was reading an article a couple of weeks ago about a guy that basically said, we're going to change our eating habits. And if you think that's difficult, it's not. And he went through kind of, how things like paprika, peppers, basically, most of the foods that Europeans eat 500 years ago, pre-Columbus, didn't exist in Europe. They weren't here. They're New World foods, basically. So, if you think, our culture doesn't allow us to eat such and such, it's rubbish. Things are always changing and always evolving. So I think that's something that we all have to be concerned about. I mean, unfortunately, it's quite a long list, and it really, I think, kind of takes away the magnitude of the graph at the top. If they had basically just put the rest as others, you would still be nowhere near what beef is, pretty much. So, and again, I think there's an Arctic ice one, which I think is particularly scary, where you're going to find that the Arctic Circle is basically just going to have not much ice left. And of course, worst case scenario is it's going to disappear altogether. We're still a fair bit away from that, but if we don't keep it to 1.5, 2 degrees above the rise, then we're going to hit those things. I read that there was an article by a guy who used to be at BlackRock, and he said that they predict that by 2050, if we don't rein in the temperature change, 1% of the planet right now is unlivable for humans. 1%, and they estimate that could rise to 19%. And I think we looked at this graph a number of weeks ago, Chris. I think it was Veronica that brought it up, where India, most of the center of India, is going to be classed as unlivable. And of course, there's 1.2 billion people in India right now. So where do they go? They have to go somewhere. They'll either go to the coast, And if there's more and more flooding and water is rising, then that's going to affect. I mean, it's just a horrific picture to paint. But that was, to me, quite a amazing statistic. And there's talk about this just transition from what we are now to a kind of sustainable footprint, if you like. Boris Johnson, British Prime Minister, came out and said there's 4 action points that he wants to see this time: coal, cars, cash, and trees. Basically, end coal excavation and use, reduce combustible engine cars and move to more EVs, more cash from rich countries to support poor countries to make that just transition to sustainable models, and something on trees and forests where they've cut down. And I think that's already been signed, certainly by a large number of countries. I think 90 or 100 countries have already signed up to an agreement to end deforestation. So there's encouraging signs, but there's certainly, I think the big one. The problem is the big countries that need to be there. Some of them are not there, particularly China, Russia also underrepresented as well. So, but I'll kind of leave on a few positive notes. I think one is a phrase that I heard and I thought it was really interesting. That we all talk about how ESG is impacting funds and how they allocate their investments, and they're basically divesting from fossil fuel companies and other polluters in the same way that ethical investing didn't invest in guns, armament companies, cigarette companies, alcohol companies, similar, but. There was a kind of nuance on it, which is that firms must be investing everything they can into sustainable products, not only divesting everything that's not. And I thought that was an interesting spin, that you're not just taking money out of those companies, but actually actively supporting those companies, which Chris and Daniel and Veronica and I talk a lot about. Development in genomics, development in sustainable food production, farms, different types of vertical farming. There's so much innovation going on that gives us hope, and these are great opportunities for investors, actually, or frankly. So I mean, basically that was it. The last thing I wanted to say was just to go back to, someone also made an analogy with 1929 to the big stock market crash, where there was huge changes in accounting rules after that, and they see that after Glasgow, actually, they expect very similar things to happen with sustainable investing, and that's kind of, as I mentioned at the beginning, the end to this greenwashing. So we've got Schroders actually had 3 ideas that they come up with. I don't think they're listed in the US. WEG might be. It's a Brazilian electrics company. They basically recondition old electric motors, make them more efficient, but they're actually involved in many different things, solar panels, and they're really turning into, in Brazil in particular, they're being held up as quite a sustainable champion, if you like, in that industry. But I don't think they're maybe they're in the US, Chris. I don't know.
Certainly I don't
think they are. So this is kind of Schroders basically, the article that I was reading from Schroders basically said this is a great opportunity for emerging markets, because that's where the change can be quite subtle, but really it's very difficult for maybe Western countries to change that have highly powered homes that are, the infrastructure is maybe 100 years old, whereas in developing markets, they're building new infrastructure in a way. They're actually going to be building it much more efficiently, much more sustainably, and using new energies to make these, particularly solar is obvious, because a lot of the emerging markets are in equatorial areas or tropical areas. So these are all good. Samsung is another example, which is basically had a very good sustainability model, and Richter Gideon is the other one, which is a Hungarian pharmaceutical company that they quite like. So that's kind of, I've gone on long enough, but I just think we need to say something about it, and just to keep it. It's definitely going to have an impact on the way investors invest in our lifetimes.
Okay, I think Daniel's going to talk about one of the 3 things he's going to talk about today is going to be clean energy ETF or something. But before we do that, I think, Daniel, you wanted to talk about the IWM, yeah? Or the small caps.
Yeah, Chris. First of all, I want to talk about the U.S. market in general. Firstly, the assumption that the S&P 500, I mean large cap company index, will renew its all-time high was justified during the past week. This again formally confirmed the uptrend. Also, previous week there was the end of consolidation in the index of mid-cap companies, I mean ETF named MDY. And as a result, the indexes of the US medium-sized companies confirmed their uptrends also. But for the sake of reliability, we wanted to see a similar updated high in the more representative Russell 2000 small cap indexes, I mean IWM. It has been in consolidation for 8 months, which is normal after it had grown for 2.5 times before. And now we see the breakdown of the long channel on the chart. In general, it's much more difficult to budge an index consisting of 2,000 companies from different industries than, for example, NASDAQ, where 5 or 6 IT giants make up half of the portfolio. The most valuable thing that IWM was able to do exactly when it was expected from it. The wider participation and growth from different market segments, the better. For more confidence, investors in small caps would also like to see a relative reversal in the trend of IWM to SPY ratio, which is already very close, but although not yet confirmed. If we're talking about some particular sector, for example, the clean energy sector. In 2020, companies from the clean energy sector, I mean sun, wind, hydrogen, and etc., set records in terms of growth rates. In particular, for example, the ICLN industry ETF more than quadrupled from March to the December. Therefore, it's not surprising that this was followed by a long pause during which the sector fell in absolute terms and ledged far behind the boarded market. But now there are signs that the situation may again turn into favor of the green companies. The graph shows the absolute and relative dynamics of the ICLN, I mean the top picture. The recent rally resulted in the price exceeding the previous local maximum from the first time since the beginning of this year, breaking the bearish pattern. In addition, it closed about the 200-day moving average again, and the chances that the absolute dynamics will reverse have increased very markedly. The dynamics against the market, I mean bottom picture, is still lagging behind. And perhaps it would be more rational to see a similar reversal before making a buy decision. But nevertheless, in a situation when the market is at highs, it makes sense to pay attention to the sector's potential. And if we're talking, for example, about China, for those investors who consider the Chinese stock market investable in the long term, the ratio of board country indexes of China and the United States is testing its 30 years lows. We already paid attention to this relative cheapness in July 2020. And since that time, the Chinese Shanghai Composite has added only 7% in absolute, which of course cannot be called a disaster, but against the S&P there was no chance of downtrend reversal. I mean the China to US ratio fell from 1.04 to 0.79. This is taken into account that strengthening of the yuan against the dollar by almost 10% over the period. And if we compare the dynamics of the indexes only in dollars, then for China it will improve in absolute terms, but will remain very weak against the United States. The monthly chart over past 30 years shows that the China to US ratio is again at its lows. So those who wish have a reason to try their luck again, I think. If the ratio breaks through this 30-year support, it could worsen the absolute prospects of the Chinese index for a long time. In this case, one more test of the long-term 200-month average is not excluded. And this has potential for a decline of 20 or maybe 25%, according to the Shanghai Composite. But if the Chinese authorities manage to regain investor confidence, then given the extreme relative cheapness, the growth potential of this market can also be very significant. But the risk, at least, look justified.
Actually, great stuff. We've talked about China many times in the past. I think, Daniel, you were here for some of those discussions. We talked about the Clean Energy Index. We've talked about, just recently, we talked about TAN and in its breakout. TAN is the solar stocks.
That Chinese-US graph, the top one there, the China versus US, is an amazing graph. That's
this
is an interesting point.
That's an opportunity to buy.
But as Daniel pointed out, if it doesn't hold this can
Alan, I think it's a good graph for the long-term investors. Yeah. But if you take it tactically or to make some, I don't know, speculations, I think it's very risk right now.
Yeah, I'm going to show. We'll bring up Baba. We talked about Alibaba before.
I think you shouldn't be investing in China if it's not long-term.
This did have this huge run-up. We highlighted this last week. Alibaba did, and I just think, again, we see this unable to go really anywhere, and turning it back down. You got MACD rolling over. So I think we're early. I think the fourth quarter is still early for China. I think we need to put in maybe a retest of this again. We'll see how it goes, but today's a pretty nasty day with Baba down almost 3.5%. There's a lot of stocks that make up the index, at least in America, that have put pressure on the NASDAQ. Even the NASDAQ again is compiling the strength into the 5 companies that make up 30% of the index, whereas these Chinese stocks haven't given much of anything to it this last week. I'm going to go back also and just look at TAN. We do have some information on Baba, and I'll put it on the web this weekend. We have a slide presentation about maybe how things will change for it next year. But TAN has also fallen back in the first part of November. Hard to believe with such bullish strength, but this had run up really strong in October. But since the beginning of November, it's come off its highs, and we'll see how if strength can come back into any of these sectors. But right now, that's not what's leading the market in this bullish stampede. As Piper Sandler put it this morning, this is a bullish stampede you do not want to get in front of. Let me just talk about Breakout and IWM, because we did highlight this Breakout in our Telegram channel. I highlighted it twice. I highlighted it as what kind of happened. This is a graph, Alan Vronick and I show almost every other week on our fit. So we watch this like hawks, and we say, look, this isn't actually a price level. There was a lot of focus on this high back in March, and we said, look, no, this is actually a slight downtrend here. We saw that pullback, and now we saw the breakout, and that happened on Monday, and then that was Monday, November 1st, and then later that day, I said, look, you can look at this with the leverage, and you can see it even better. And you can see the clear breakout with the leverage fund TNA that we like to use. And that was a clear breakout. It was a weak pullback in the end of October. We didn't think it was going to go retest lows, and sure enough, it turned around on November 1st and headed up again. So Daniel was, great to point out that this is something that is quite a major, significant step in the right direction for the fourth quarter and beyond in the first months of the bullish period. So let's look at this. What happened? IWM, here's the Monday breakout on the open, strengthened all day, closed at its highs, and then pretty much held that overnight. These gray periods here, or the shaded periods, are with the overnight action. It gave a back immediately on the open, some of that, but then it stayed pretty much flat all day. Look at Wednesday. It took off. Gave a little bit back before the Fed announcement. The Fed announced, and it took off again. I mean, we highlighted it here, but you could have gotten it any day on Tuesday, anytime during the day on Tuesday. And then the real breakout was Wednesday, especially after the Fed. What's disheartening and what's a bit frightening, I think, and for me, is when you see this kind of give back, that basically made a new high in the first 15, 20 minutes of the market on Thursday, and then gave all those gains back and sold off. So we're seeing the market here run out of steam a little bit. And again, today, opens high, retests that high, gave it all back. IWM itself is up over 3%. As Daniil said, it's hard to move 2,000 companies in an index and get them up 3%. Okay, a lot of this was, there was a lot of crazy news this week. I don't know if you saw this, but this was Avis Rent-A-Car. So Russell 2000 is a capitalization weighted index. So this was the biggest company in NASDAQ in the Russell 2000 last week. It went from $100 a share, $160, $170 a share, to over $500 in one day. And so that was on the Wednesday breakout day. You can say like this basically led the NASDAQ to all-time new highs, because as it becomes more heavily weighted in the index, it actually is the largest stock in the index and therefore drives the index up. We've seen that give back a lot of those gains, and really we need to see more of a broad-based, more healthy kind of rally in the NASDAQ. I expect it to happen. The index did the right thing in the first half of November, or the first week of November. It broke out. Now it maybe needs to go back and retest those areas, a little bit of the breakout, and then from there it should be up and away from there. But I just wanted to highlight what was happening in the NASDAQ. in the Russell. I'm so used to talking about the NASDAQ that it's just a slip up every time. So the Russell broke out. Great story, great stuff. I'm going to bring up a couple other stocks that really deserve our attention. One of those stocks is Boeing. I've never been a fan of Boeing, and we've talked about this many times, and people write in and say, is it time for Boeing? And we say, no, it's probably not time for Boeing yet. It's not time for Boeing yet. It's not time for Boeing yet. I think I'm going to change that now. It's probably time for Boeing, or it's getting very close to a time for Boeing, because we're in this, I don't know if you can see this very well, but we're in this, again, this down, a triangle, they call it, pattern on Boeing. We butted up against it. MACD is rolling up. There's a lot of other indicators that are rolling up. We kind of poking our head above it today on a big day where Boeing is up almost 5%. Boeing's earnings were out. They were bad, but there was a lot of talk about, hey, how much worse can it get, and how bad really is it? We've seen a lot of industry experts in terms of analysts following Delta Airlines, and I highlighted this on our trade talk that Delta Airlines CEO saw 450% increase in bookings in 1 week, just because of the reopening in the United States. So of course they're starting from tiny levels. So 450% when you have 4 airplanes going, you can increase that quite drastically. But Boeing stock is an interesting play. Of course, we love Rolls-Royce for the green part of it. Actually, also they have a lot of news coming out. They're teamed up with the Qatar Sovereign Fund to introduce electrical engines and small airplanes. They've got a lot of stuff in generators going on. So interesting stuff there. So all these airplane stocks, these engine stocks, these airplane engine stocks are really an important thing. We mentioned Embraer earlier. We had that on the blog. So quite an interesting play here in the fourth quarter. If we can get the economy open and we can get out of this really the COVID overhead. It's hard maybe for the Europeans because they're kind of suffering. I know Russia's suffering from a lockdown again, but in general, there's a lot of bullishness in travel. So I'm going to look at another travel related thing, and we posted this breakout also. Airbnb. Look at this stock today, guys. 12% up in Airbnb. This gave you the earnings were fantastic. We highlighted this. I'll show this again on our Telegram channel. We highlighted this in Telegram channel. Just what last night we highlighted. Said, well, that was today, but last night I said November 4th. I said there's a clean breakout today. The CEO of Delta announced their bookings went up 450%. So it was all right here. I'm just repeating what I just said. And we saw that they had a super strong quarter, and their guidance may be a bit weak. It's in line, but they're talking about all kinds of new travel. That the Thanksgiving period was up 40% in terms of more booked nights than last year. So people are traveling. Things are opening up, and look at the response. Another travel-related stock is Uber, and we mentioned this. We mentioned this is likely to have great earnings, and you can see today they broke out here after earnings, but they've given back a lot of those gains today. This thing was up much more today. I don't know if you can see it here. If I can scroll in or whatever, but let me see if I can get rid of some of these studies. You can see here that it was up quite a bit after earnings today. It's kind of where it opened today, but I think we can get a breakout in Uber. We saw good news from Lyft last week. Also, it's a ride-sharing program in the United States, at least. So this is good earnings on these. Again, an opening theme. And I'm going to go and talk about one other stock kind of related to that, Yandex. Yandex has a huge taxi service. Again, we saw and highlighted Yandex's breakout. We see these pullbacks. We see strength. We see a pullback strength. And now we see pullback. And now earnings. Look at just perfectly timed this again. Earnings were out, decent earnings, and it's up, showing strength. And we highlighted that also on our channel. So we highlighted the travel related, the get back to normal kind of, not go back to the office necessarily, but get back to the holidays, get back to travel related issues for the Thanksgiving in America, and then Christmas in the Western world, and then New Year's in Russia, and New Year's in the Western world, and then the Russian holiday. So you're going to see a lot of travel gearing up for this, and you're going to see a lot of stocks respond well. I want to show a couple setups. One is in Amazon. Amazon, we saw a lot of call buying. They came out with horrible earnings. We discussed the earnings. Never really sold off. I mean, sold off. And we talked about how it had bounced back during the day, right after the earnings, and how it really couldn't sell off. And then it gave back and retreated to the bottom here. And perfect. Look at this chart. I mean, your stock is up 7.5% in 3 days. So this is an important breakout for Amazon. We feel there's been a lot of call options being bought on this, and we think that this can go higher in the fourth quarter, especially during the Christmas period where people are buying presents and gifts for everybody. So I think Amazon might be a little bit, I should say, conservative in their estimates of their fourth quarter. If they can get the shipments in and stuff, the demand should be there. I want to take a look at some semiconductors really quick. This is a long session, I know, but Nvidia, look at this chart on Nvidia, a big component of RPG, the tech, or what I call it the tech, but it's the growth fund that we have a lot of interest in always. So this is the Nvidia
It's the top holding.
Yeah, so this is it the top holding Nvidia? I think it's
Yes.
2.5% of the weighting. So scary. For bulls, it should be like, okay, it had its run here. This gets parabolic like this. You see a move like that. It's holding it. I'm questioning how higher it can go. You saw AMD very similar. So these semiconductor stocks, AMD is giving it back today, down 1%, but big moves in these semiconductor stocks, big moves in chips that are driving data centers, and a lot of it is around IPO of RIVN on Tuesday. RIVN is 20% owned by Ford. It's also owned by maybe 20% owned by Amazon, and then maybe 4% owned by Ford, or maybe 2020. I can't remember the numbers. The important thing is this has given a lot of speculation to this company, Lucid, and it's also given a lot of speculation to the tech stocks, the chips that provide hardware for that vehicle. I'm going to bring up a couple others that are kind of important just before I close out. We highlight all the time how poorly this stock has done and how everybody hates it. It's called car parts, and we've had this huge run up in pricing on second-hand vehicles in the United States. This company has gotten no love from Wall Street. However, this has now, I think it has a 22% or 24% still short interest. So if this thing does start to move, we can have one of these moves like we used to see in GameStop, or we used to see, we saw in Avis this week, car, the ticker symbol car we just talked about, where, this Wall Street bets and all these, I call them young investors, but these very speculative traders start going after highly shorted companies. This could be one of them. It came out with earnings. The earnings weren't bad at all. You know, they said that they're turning things around in the company, and this is, like I said, has a high short ratio, so might get a good, really big bounce, and that's $15 stock, so it's easy to participate in without a whole lot of money. Industrials, really quick, industrials have been selling off a lot like the TAN stocks and stuff in the first part of November here. And we got a big move in RIVN today. I'm going to check. There are some others. Carrier, I think, is starting to look like it could rebound. This is a long term. Let me put a weekly chart up here. Carriers at a kind of really good, important point to get long here. I came out with really good earnings, and just these haven't been in favor. They've ran up so much during the year that they pulled back when the tech and the small caps came into play. And I think if markets are going to go higher, these will also start participating. So Radiant, Otis would be another one. You know, it's pulled back also into this nice level here. Let me show you on a daily chart. So starting to get some speed up after its earnings. Not bad earnings. These pay decent dividends. So these should be interesting. And I wanted to bring up, last thing I want to bring up is Arch Coal, which again sold off here in the first part. And look at, we talked last week or the week before about the coal industry, and if we're talking about green energy and how these things should go out of business. I mean, like long term, we should be putting coal companies out of business. And look at this chart. And so if you believe in the green and you believe that there's new energy out there and it can replace coal, these are at places you want to be out of this sector if you think that's the case, and potentially even shorten it. And there's places like liquid natural gas that the ETF that you can short it. We mentioned this before. Cold, it's a beat up ETF. It's actually it's an inverse ETF, so it's short liquid natural gas, the actual gas. So if you think Russia's going to supply or fill supply lines and fill storage areas in Europe for the winter, and the winter might not be that bad because it's global warming, this stock could give you a run, because if you look at liquid natural gas, you're going to see it's the exact opposite, where it's ran up the whole year, and now we're at these times where maybe this thing begins to sell off. So those are the types of things I wanted to talk about and highlight, and stay in touch with everybody through our trade talk posts on our Telegram. Everybody should be watching these and seeing what's going on. And we'll see everybody next week. Have a good weekend. Thanks, Daniel, for joining us. Really hot topics here with IWM breaking out. I'm glad you saw that and brought that up. And of course, the green energy, we always like to talk about, because there is so much in terms of technology to get involved with. So Veronica has jury duty today. That's why she was unable to join us. Maybe she's watching us on Facebook. And if not, she'll join us next week. And thank you, everybody, for joining. Daniel, again, thank you. Take care, everybody. Have a good weekend. Bye-bye.